This week, metals and mining markets grabbed global attention as hard assets extended a blistering start to 2026. Gold and silver to all-time highs north of $4,600. And then on the silver front, nearly $90 an ounce, drawing in safe haven flows amid geopolitical and monetary policy uncertainty in the US and abroad. I tell you what, let's make sense of this entire market narrative. I'm joined now by Rebecca Teltscher, portfolio manager at Newhaven Asset Management. Rebecca, it's a pleasure. Thanks for talking to us.
Thanks for having me.
Gold and silver blasting into record territory this week. I'm curious, what's the primary driver right now? I mean, are we looking at safe haven flows, inflation hedging, or broader structural bull markets? Yeah, or all of the above?
Yeah, you bring up a really good point. I think, at least for gold, it's all of the above. Silver is a little bit of a different story, but the story is constantly evolving, and we're just trying to make sense of a very dynamic environment. So, when it comes to gold prices, as you mentioned, there's a safe haven flow. There's also an inflation hedge. As central banks and governments are facing mounting deficits, it's also a hedge against the instability of the governments. As geopolitical tensions rise, we see a flow out of the markets and into gold. And central banks have been buying physical gold for the past few years. So that's all kept gold prices high. Silver, on the other hand, is a little bit different. I mean, at first, I think there was a little bit of that spillover effect from, precious metals, spilling over from gold into silver and platinum. But I think what we've seen more recently is that, one, there's a supply deficit. So inventories have been steadily declining for silver since 2021. But we're also seeing an increase in industrial demand for silver. So unlike gold, silver actually has, a need in industrial production. So whether it's solar technologies or electronics, and I think one of the major ones is also defense. Silver is used for things like missile guidance and satellites and radar technology. So because of its electrical conductivity and thermal properties, silver is in high demand. And as geopolitical tensions rise, so would the need for investing in more defense items. And I think that's what's also impacting the silver market right now.
It's also interesting when you measure that against what's happening like with copper, for example, and other industrial metals also hitting new peaks before pausing. To what extent is that rally grounded in physical demand? I mean, you spoke about that on the end of silver versus, let's say, speculative positioning. What's your take?
Yeah, I mean, you mentioned the same thing with copper. I mean, copper would be impacted also, supply constraints, but then also, the electrification of the world. And so, as electricity consumption goes up, so does the need for copper. So, there's an actual physical demand for these mining products.
It's just so interesting to see what's been happening at the US Federal Reserve, right? I mean, how much do you think the debate around future US interest rate cuts and that Federal Reserve independence is influencing these metal moves compared to, let's say, traditional supply-demand fundamentals?
Yeah, I mean, it's interesting because I think it's definitely playing a role in the commodity market, not so much on, in the stock market. Stock markets continue to rise despite the threat of, independence of the Fed. But I think what we are seeing is, at least for the physical gold market, as tensions rise, as uncertainty rises, then we are looking for alternatives outside of the traditional equity and bond markets.
Yeah. Listen, so it's so interesting to watch what's happening on the Canadian stock market, right? The main stock index climbing to new highs as energy and mining stocks, continue to sort of surge. How are mining equities behaving, Rebecca, relative to, let's say, underlying commodity prices? It's interesting to see the both ends of this. And does this reflect real earnings growth or just multiple expansions? How are you seeing it?
It's a little bit of everything. I think like last year we saw, gold stocks get ahead of gold prices. And I think that's just normal as a leading indicator. And so, again, I'm expecting to see more volatility in the mining space, this year as we're seeing, this is a very evolving market. A lot of these things, just have started just at the, since Thanksgiving. So at the end of 2025, right? So, a lot of these spikes generally don't last. I'm seeing, studies that are saying that, this could be the new normal in terms of pricing. And I'm also seeing, that the opposite, that this is a very speculative market right now. And as so, you need to be very careful when you're investing in the market. So, you have to focus on reasonable valuations, and, you can't necessarily expect commodity prices to remain at all-time highs, or at least you need to invest in companies that can withstand, more volatility in the prices, and that are not just, breaking even at high commodity prices.
Let's talk about that. I mean, can we talk about positioning risk, right? With the prices at historic highs, where do you see vulnerabilities in the metals complex? I mean, if macro sentiment, let's say, shifts.
Yeah, I mean that's a very good point. I mean, I don't have a great answer for that. We focus very, like, our positioning is very much conservative. So, unlike the traditional market, like if you look at the Canadian market that has, 10 to 20% exposure to metals and mines, we only had a 2.5 position that has now, more than doubled, just because of stock price rallying. But, we try to limit exposure to commodity priced stocks, because we've seen this volatility before. And, for us, we're all about preserving capital for our clients. And so investing in mining stocks that could have a lot of volatility is not necessarily conducive for our clients that are retiring and trying to live off of that stable income. That being said, that doesn't mean it's not a good long-term investment. We saw that last year. Look at the stock price. The TSX was up 32%. Most of it was from mining sectors. So, I'm not saying it doesn't work. I'm not saying it's not going to continue to work. But for us, we try to limit risk exposure, and we try to focus on the safer areas of the market.
Well, we'll leave it there. Rebecca Teltscher, Portfolio Manager at Newhaven Asset Management. Always a pleasure. Thanks for talking to us.
Great. Thank you so much for having me.